Hi everyone, this is Mike Mello from Mello Property Group at Preferred Real Estate Brokers.
And I'm Michael St. Clair with Interlink Mortgage.
Today we're going to be discussing purchasing a home. There's many different people that help with the home purchase. Two of the main people that help are a realtor and also the lender. So today mainly what we're going to do is talk about the loan process and what's required to get a loan. So Mike, can you tell us a little bit about the three main things that go into getting a loan?
Absolutely, great question. In today's world, or at least in the lending world, the best way to know how to get a loan is based on three components: income, credit, and equity. And the best way to memorize that is we call that ICE in the industry.
Great. Can you tell me a little bit about the requirements and also the pitfalls in the income bracket?
Yeah, absolutely. When it comes to income, a lender or financial institution is mainly going to want to focus on the employment history, and they're going to want to see a breakdown as far as your income. So an example, if you're a W-2 employee or salary and you also receive a commission, a financial institution is want to see a breakdown of those commissions for at least the last 2 years.
Great. So one of the other things was credit. You talk about credit.
Yes.
What's the minimum credit score and how does that affect the mortgage?
Great question. Here at Interlink Mortgage, we can go as low as a 580. Every lender is different when it comes to FICO scores. And some of the bigger things that you want to focus on when it does come to credit are if there are any derogatories or if there are any type of collections. Those are going to be the biggest focal points, or at least pitfalls, that lenders are going to be looking for when it comes to credit.
Okay. I know I've had clients before and they use Credit Karma and sites like that.
Yes.
What are your thoughts on that?
Well, Credit Karma does serve its purpose when you're trying to find out where you are with credit score. On the lending side, we don't use those algorithms. In fact, there are 52 different algorithms to computing credit scores. So on the lending side, if you are going to Credit Karma or myfreecreditreport.com, typically when you come to a lender, you'll see about a 20 to 40 point differential than what you're seeing on Credit Karma or myfreecreditreport.com.
Great. So the last thing that you're talking about was equity. What exactly is equity and what's that to do with loans?
Okay. Equity would represent the down payment, how much you're putting down or how much you're investing into that purchase transaction, or if it's a refinance, how much you have already equity inside the home. And contingent on the down payment is going to be contingent on what kind of program you're going to be going after. So an example of that, FHA has minimal down payments as low as 3.5%.
Okay, great. So now that we've talked about the high-level overview of the mortgage industry, I know that some of my clients, they talk about down payment assistance programs. Some of them get confused with FHA, conventional VA, USDA loans. So let's talk a little bit about that. Let's start off with the down payment assistance.
Okay.
What exactly are the requirements for down payment assistance? How does that work?
Down payment assistance is a phenomenal program. Right off the bat, it is county specific. So each county has different brackets as far as how much you can qualify for. But the biggest focal point is going to be the minimum credit score. For down payment assistance, it has to be a 640 FICO score, and they do cap as far as a debt to income ratio at 45%.
Okay, great. So the other one, FHA, is one of the mortgage products. So tell us a little about FHA, the minimum requirements, and what exactly is involved in it.
FHA is a government loan, Federal Housing Administration, what it stands for, and it's mainly geared towards the first-time home buyer or even a subsequent buyer who maybe doesn't have perfect credit scores or maybe doesn't have a large down payment. And these become really useful when you are above 45% debt ratio, not doing a down payment assistance, and or if you want to put a minimal down payment of 3.5%. One of the bigger things about that is it is, not, again, not credit score driven, so therefore it does not impact your interest rate.
Okay. So is there a maximum for the FHA?
Yes, there is. That's actually a great point. So each county is different for FHA loans. Here in Orange County, you have a loan limit of $275,000. So what that really means is you don't have to purchase a home that's $275,000. Your max loan amount would be that amount. So anything above that, you as a consumer would be bringing those monies to closing.
Okay. So one of the other loan products is a conventional loan,
Yes.
probably one of the more common ones. Tell us a little bit about that, what down payment is required and how that differs from FHA.
Now, conventional is very common. It's very the everyday loan. Mainly, if you've heard of Fannie Mae or Freddie Mac, you're thinking of conventional loans. And conventional loans, in my professional opinion, are mainly used from a strategic perspective because it gives you the availability to do different things with your down payment and any type of PMI, private mortgage insurance, that's included in that loan.
Okay. One of the other mortgage products is a VA loan for the military.
Yes.
So what do we offer for our military folks that served our country?
Well, for all our veterans, one, thank you so much for all your service. But two, for VA loans, you have minimal down payments such as 0, 100% financing. But one thing you definitely want to be cognizant about is if you're a first-time home buyer or first-time user of a VA loan, you do have a funding fee. A funding fee is for anyone that is not disabled, if you are 10% or more disabled, you are exempt from a funding fee. But you do have the option of doing 0% financing with no mortgage insurance.
Okay, so if you're not a military member and you want 0% down, there is another option, I believe, USDA. A little bit difficult to qualify for, but tell us a little bit about the USDA product.
USDA is mainly for the agriculture, not necessarily farmlands, but it's territory specific. So before you even dive into a USDA loan, we want to find out first that the home that you're looking at least the areas you're looking at, are in USDA territories. USDA does give you 100% financing. However, it does come with mortgage insurance.
Okay, and another one that I do get questions about sometimes, I do a lot of vacation rentals and things like that, so I get foreign buyers. So tell us a little bit about the foreign national loan products that are available.
Absolutely. Foreign nationals are become bigger and bigger over the last couple of years. Mainly, we have a lot of people want to buy here in the States. It's a great market. So for foreign national, if you have a work visa, you can purchase a home with as little as 20% down. If you don't have a work visa, you're looking at least a 30% down payment.
Okay, great. So this is some really good information, some very high-level overview of the lending process. So if any of you actually have any questions or have any individual questions about lending, give Mike a call. His number's on the screen there. And then also when you're ready to purchase a house, give one of the team members at Mello Property Group a call as well, and we'll have their information also on the screen. So thank you all for watching. Thank you, Michael.
Thank you.
All right, take care.
Bye-bye.